thank you so much for joining us on the call today. What's happening in the markets right now? Why are some people so freaked out about the markets? One thing I'd love for you guys to do, if you guys haven't had a chance already to, is take a look at our YouTube channel. We create a lot of YouTube videos. So if it's something that you'd like to learn more about the markets, investing in general, have a look at a YouTube channel. I create about 1 or 2 videos a week, and they're always pertinent topics. So I'd love to have you guys come join. So what is the markets looking for right now? Well, the markets are battling this nasty thing called inflation, right? And that is the big issue right now. Inflation, inflation, inflation. And I cannot tell you how much it's freaking the markets out. When is inflation going to end? When is it going to subside? That is the big question, okay? All right, so here is a paper trading account. I'm going to go over exactly what's happening in this account and why it's happening. So this is a paper trading account, and this is what we encourage everyone to start off with when you first start investing. You don't start with real money. You start with fake money. So you have an idea as to what's happening and why it's happening, okay? So I've got some stocks here, and I just want to preface what's happening in the markets right now before I make some trades. So what's happening in the markets right now is the markets are very, very concerned about inflation. And now you see this is starting to affect the housing market as well. So what happened in 2020? Well, in 2020, the economy went into a major, major correction. And that was a result of COVID. Okay, so everything is going fine. All of a sudden, COVID hits and bam, the economy goes into an absolute tailspin. Goes down, down, down. And then what happens? The central banks, the Bank of Canada, the Federal Reserve of the United States, they had to print a lot of money and give money out to people to get them through this tough time. And that was great. It got us through that really, really tough time. Had that not been done, we would have faced something akin to an economic depression. But because the bank stepped in and did all this stuff, it avoided economic depression for us. Now, the problem is we are paying the price now. Because so much money was printed, now we have something called inflation. Inflation is simply defined as too much money chasing too little goods and services. So you've seen it at the grocery store, you've seen it at the gas stations, you've seen it everywhere. Housing prices are up. Everything has gone up in price. So the reason the banks are raising interest rates right now is because they need to lower inflation. Inflation is a very bad thing for economy long term. So they want to lower interest rates, lower inflation, and thus not have to increase interest rates as much. So that's what's happening, and that's why the market's been taking a beating so far this year. But one thing I want you to realize is the way we invest here at Theta is we invest in high-quality companies for the long run using our simple option strategy. It works for us very well in the long run. So that's a bit of background about what's happening in the markets. All right, so now let's take a look at some of the trades we can do. All right, so we're going to look at some of our favorite companies here. So I'm going to look at some of my favorite companies here, and I want to do a trade on Microsoft here. So I'm going to go to Microsoft here. Okay, now the first thing we do here at Theta is we investigate the companies that we invest in. Okay, we will not invest a company if we do not think it'll be worth more in the future. Simple as that. It may go down temporarily. Nobody knows what's going to happen in the short run. But we think a year, 2, 3, 5 from now, it'll be worth more. Okay, so that is an absolute given. All right, so now I'm going to take a look at Microsoft here. Let's look at this. And we got here Microsoft. Okay, so now I'm going to look at this squiggly wiggly chart, which it looks like a bunch of nonsense, but it's not. It actually means something. And we can see Microsoft is down a fair bit this year. And we love this company because we've done our homework on Microsoft, okay? And Microsoft is trading at currently, as you can see at the top, $267.60, okay? So there's 2 ways of doing this. And why I think our strategy is the absolute best in the world is because you can, if you believe in Microsoft, well, you can buy Microsoft for $267, great, and you can wait for it to go up. But with our strategy, you can get paid a lot of money just for agreeing to buy Microsoft using the options market. I know it sounds kind of weird. All right, so here it is, Microsoft trading at 267, okay? And I say to myself, you know what? I love it at 267, but I wouldn't mind buying it even cheaper. So I'm going to agree to buy Microsoft for 265. So I'm going to press this options button at the top, okay? And all these weird numbers are going to come in, and it might not make a lot of sense, but they do, okay? And I say to myself, I'd be pretty happy to buy Microsoft for, 265, like I said, okay? So 265, but even Looks like I'm getting paid $8.50 just to agree to buy Microsoft for 265. What sort of return is that for me? It's about a month. We'll just call it a month. So this says Microsoft August 5th, 2022, 265. So what am I doing here, guys? I'm agreeing to buy Microsoft for 265, even though it's trading for 267 today. I'm telling the market, you know what? Even if it goes to 260 or 255, I agree to buy it for 265. But I'm being compensated $8.65 a share. How much does that work out to me?
That is 3.26%.
3.26% for about a month. Now, just for anyone who has internet connection, just a quick show of hands. Would you guys rather get paid almost $9 a share to buy Microsoft, or would you rather just buy it at its current price? Which one would you take? Well, for us, it's a pretty simple thing. We would rather get paid a lot of money just to buy it, okay? So that is what I'm going to do here. What I'm doing essentially is I'm guaranteeing the buy price. I'm saying no matter what price it goes to, I'm going to agree to buy it for 265. So even if it goes lower, I still have to buy it for 265. The reason I don't mind is because I would have bought it for 267 anyways. But now I get to buy it for cheaper, and I get paid about almost $8.50 a share. So I'm going to go ahead and do this trade. I'm going to do one contract, which means I agree to buy 100 shares of Microsoft. And there we go. I'm going to slide this order through. And bam, there it is, order filled. So now we're going to go back out and see how much I got paid for this, okay? So I'm going to go back out here and go to my transactions, orders. And it hasn't popped up yet. It probably will in a second. There we go, trades. Oh, there we go, trades. So Microsoft. All right. Microsoft, it looks like we got paid $8.30. Ounces, I would rather short-term puts on rising market. Yes, 100%. So we got paid $8.30 just to agree to buy Microsoft. Imagine you could do this for real estate. You tell someone, hey, I know your house is worth $500,000, but I'll agree to buy it off you for $490,000 in the next month. And you pay me 3% for that. How many people would take that deal? In the real estate market, people will be doing all kinds of deals like that, but you can't do that in the real estate market. You can, however, do it in the stock market, okay? And what we're doing is we're leaving ourselves in a worst case scenario where we own a stock in a company that we think will be worth more in the future. I hope you see why this can be absolutely life-changing. Because if you do this the right way, over a long period of time, I'm not talking about 3 months or 6 months, because anything can happen in the markets in the short term. But over a long period of time, imagine understanding how to get paid a lot of money just for agreeing to buy stocks you would be buying anyways. That to me is an absolute life changer. It changed my life. If I hadn't figured this out, I don't know where I would be today. So that's one trade we made. Now let's look at another company we like here. We're going to look at Apple. Okay, everyone's heard of Apple. And again, we're not here to tell you what companies to invest in. That is entirely your decision. But we're going to show you the companies that we invest in, why we invest in them. Okay, so we're going to go to Apple here. And Apple's trading at $146.80. Okay, and again, I say to myself, interesting. Apple's trading at $146.80. Well, I would like to buy Apple, let's say for 50-day moving average of 145. I'm going to go 145. Okay. So I'm going to go to the same date, August 5th. Okay. And I'm going to agree to buy Apple for 145. Now, my other choice, like I said, is I can just buy Apple for 146.91 right now in the open market. But why would I do that when I can get paid a lot of money just to agree to buy it for 145? Okay. And if it doesn't go to $145 a share, well, I get to keep all that money. And even if it does go to $145 a share, I have to buy the shares and I get to keep the $4.06, whatever I'm going to pay premium here, okay? So here we go. And, I don't need this one here. My apologies. And so it looks like I'm getting paid about $4.70 a share. What does that work out to me here? Divided by 145.
So you got
$4.70 a share divided by $145.
3.26%.
All right. Again, 3.26%. So I'm going to go ahead and do this trade. Bam, done. All right. Order filled. And now let's see how much I made on this trade. Okay, so I'm going to go back out of here again. I'm going to go to my transactions and my trades, and there's Apple. All right, Apple. I got paid $475 US. So between the two trades there, I just made $1,300 US, and all I've done is agreed to buy 100 shares of Apple and 100 shares of Microsoft for the next month or so. Can you imagine how life-altering this can be if you truly understand it? Just learning how to make money on your phone for agreeing to buy stocks that you would be buying anyways. All right, so let me do a couple more trades here. And Manib, why don't you recommend one? Why don't we do Tesla here? We'll do Tesla. Now, Tesla is a company that I particularly like a lot. Doesn't mean that you necessarily like it. You have to do your homework. We teach you all of this here at Theta. We teach you what we look for, why we look for it, how to evaluate a company's financial health, all the things that you need to know, okay? The idea, again, is if you think it'll be worth more in the future, you certainly wouldn't mind buying at a discount and getting paid a lot of money for it, okay? So again, I'm going to look at Tesla here. And Tesla, I'm going to say, you know what? I'd be happy to buy Tesla here for, I just crossed the 50-day moving average. I'd be happy to buy Tesla here for $740, okay? So I'm going to go to 740 here. And it's currently trading at $759.30. And Tesla's about to go for a three-for-one stock split coming up as well, okay? So that's going to affect the share price in the next little while, but that has no bearing on our decision today. So $740, okay? Manib, what am I getting paid here? It looks like I'm being paid about $48.70 a share divided by 740. What does that work out to?
6.5%.
6.5%. So I'm getting paid 6.5% for 1 month just for agreeing to buy Tesla shares, which I would have bought anyways. I cannot stress enough what a game changer that is. Getting paid 6% plus for a month just to agree to buy shares in a company that I buy anyways, that to me is a no-brainer. So I'm going to go ahead and do this trade. Now, there's a lot to learn. As much as easy as this may sound, there is a lot to learn this. There's also a lot of discipline required, okay? So I'm going to go ahead and do this trade, and bam, there we go. Trade, let's see if it's executed, and it's pending, but it should go through any second, okay? So I went and did that trade, and I'm going to go back to my main screen here, and there it is. Tesla trade went through. So I'm going to go to my transactions here, and what did I get paid in this Tesla trade? I got paid $4,755 US, all for agreeing to buy Tesla for $20 cheaper than the current market price. To me, that's an absolute game changer. Imagine one day getting yourself in a position of retirement. So what I did over the years, guys, is I used this strategy to earn these premiums, all like the money that I just made from selling Microsoft, Apple, Tesla. And I used it over the years to buy myself real estate. And that got me in a position of financial independence. When you understand how this works, it can absolutely change your life. You must still be disciplined. You must put a lot of effort into it and learn it very well. But the key thing is you have to be disciplined, and you have to look at high quality companies that you believe in long term. Alan says it's a no-brainer except for margin exposure. Absolutely, Alan. And what Alan is referring to here, margin exposure, is if you play with more money than you have, this can get very dangerous. If you don't do that, you will be able to, even if the market goes down, you can ride out the storm. Like right now, we've gone through a major market correction, okay? But if you're not using more money than you have, then you have nothing to worry about. You just wait for your stocks to recover. However, if you are playing with way more money than you have, as with any market, the real estate market, the stock market, you can find yourself in a lot of trouble. So that's what Alan's referring to as margin exposure. That is something we don't do much of here at Theta. We don't like to get ourselves too much in the margin because it can get very terrifying. It causes you to have sleepless nights and is not a good idea, okay? And we hammer that rule home over and over and over again. Now, let's take a look at this. Let's say, for example, you can see I own 300 shares of Apple here, okay? You can see I own 300 shares of Apple, and you can see my average price here is $134.38. I want to highlight that here under position where it says here. I'm going to open and close it. So I own 300 shares. It says long 300. And it says my average price here is $134.38. We can also make money if we agree to sell our shares for a certain price as well, okay? And this is the other part of the equation that we have here at Theta. So again, I'm going to look at my chart first, okay? And I'm going to say to myself, where would I like to sell my Apple shares? Now, I know I only paid $134 for them. Where would I like to sell them? Maybe I like to sell them for about $150 a share. So I'm going to say, you know what? I'd be happy to get rid of my Apple shares for $150 in the next month. Okay, so I'm going to go to 150, and maybe if I might even go a little bit higher than that, but I'm going to go to 150. Okay, so I'm going to agree to sell my Apple shares for $150. It looks like I'm being paid a lot of money, so I'm actually going to go to about 100. 150 is a little bit close. I might have to sell my shares. I don't want to. So I'm going to go to 155 here, okay? What am I getting paid here? $2.30 divided by 155. Looks about 1.5%.
Yep, exactly, 1.5%.
So I'm getting paid 1.5% for agreeing to sell my Apple shares for $9 more than they're currently trading for. To put that in a real estate perspective for you, imagine you own a $500,000 house and you say, you know what? I'd be happy to sell my house for $550,000. And someone pays you $10,000 for the month to do that. You'd probably take that deal all day long. Now, you may have to sell your home for $550 if it really goes up in price. But if it doesn't, you keep it. Even if it does go to that price, you still keep this money. So I'm going to go ahead and agree to sell 200 of my 300 shares of Apple. So when it says quantity one, each one represents 100 shares. So I'm going to go ahead and agree to sell my 200 of my 300 Apple shares for $155 on or before August 5th of 2022. All right, I'm going to get back out of here and let's see what we got paid on that. All right, transactions, and there we are, Apple 155 call. I got paid $211 times 2, so I got paid $422. And the worst that's going to happen to me in all these scenarios, guys, is either I'll have to buy some shares of companies I like, or I'll have to sell some of my shares at a profit of companies I love. That's it. That is the worst that's going to happen to me. Now, yes, the markets can get ugly from time to time, but I want to point out to you, the markets on average, the stock market on average, the S&P 500, has gone up about 11% a year for the last number of years. So I'm going to go and just to show you, even though we're going through a pretty nasty spell right now here on the stock market, you can see right here, and we went through another really nasty one here in 2020 when COVID started. The stock market has always gone to an all-time high, always, okay? You can see how much lower it was 5 years ago. And why is that? Because corporate profitability continues to increase, our lives continue to get better, and innovation continues to happen, okay? So these are all the things that we look for when making these decisions. And it's no different this time. We're looking for the exact same thing. We're looking to buy high-quality companies at a discount and get paid for it and leave ourselves in a worst-case scenario where we own high-quality companies. That's it. And we make a lot of money doing this. Now, again, like I said, the markets can go down temporarily, but that's okay because the stock market has historically always gone to an all-time high. And that's what we look for here, okay? So, Manib, is there any more trades that you'd like me to do?
No, I think that's good, Omar. Maybe we move to Q&A.
Yes.
We got a few people on here. So please, everyone, ask your questions. Omar can answer them, whether it's about the markets, trading, Omar in general. We answer all questions. So please put them in the chat.
And we know, yeah. So if you have any questions, please put them in the chat. So if you have any questions at all, we'd be happy to answer them. Magdalene, how you doing? Hope everything's well. And so answer any questions, guys. Otherwise, we know that interest in the stock market gets low during these time frames, but this is the best time to educate yourself and ground yourself in a strategy which we think, like, to me, this is the best strategy in the world. I can't imagine going back to the old way of buying stocks. Why would I want to buy a stock for its current price when I can get paid to buy it for cheaper? Why? For what reason? Unless I think that stock's going to take off, I would much prefer to do it this way. And I hope you guys understand why, because it is such a game changer. And imagine being able to use these premiums to live a high quality life, to be able to go on vacation. So what I did over the years, guys, is while I had a job, I would take these premiums. I didn't expand my lifestyle. I kept making these premiums. I kept adding up, and I kept using them to buy more and more real estate until one day I had enough real estate and I had enough stock and I had enough knowledge never to have to work again. And that's the position we're trying to put people into. So I hope you can understand the theory behind it, why it can be so lucrative and why it can change lives. Looks like we've got a quiet crowd here today, except for Alan.
Omar, why don't I share my screen? Let me know when you can see it. I'm maybe just sharing our website. For those that are interested, let me know when you can see it, Omar.
Yeah, that's it.
Awesome. So for those of you that are interested in learning about what we do, our community, all that good stuff, you can visit our website, read about us, check out our Google reviews. We have our next introductory course in September, but we also do give you online access. So you can start learning today. And as Omar said, when the markets do retreat, as they have now, that's usually when the best opportunities come up. So you can go to our website, click courses, and then you can click register now. Our itinerary, what we do, how we do it, all is listed here. Read about it, book a call with us as well if you'd like. If you go to our website, you can book a call directly with me. I can answer your questions about the courses, whatever they may be. So just wanted to share that with everyone. And Omar, I see we have a question. If you want to address that.
Yeah, absolutely. I've been holding for some time in this market and was wondering the following. Do you look for upward trajectories? For example, when the stock price goes above the 20-day moving average? Yes. So we're starting to see some good signs. The stock market's starting to move. Some companies start to move above their 20-day moving average and closer to the 50-day moving average. Yes. Do you then sell a put? If you have more money and you're happy to obviously get more stock, of course, that could be a great sign to sell a put. Or you could sell a call as well. The great thing is volatility right now is pretty high. So you're getting paid a lot of money for selling calls and puts. When volatility is high, you get paid a lot more money. So as you can see from our newsletter today, Magdalene, you're going to see in a few minutes, we did some puts and some calls today. So we did some puts to agree to buy some stock, and we agreed to sell some of our stock as well. Again, because we're starting to see some good signs in the markets. Starting to see, again, like you said, stocks are starting to cross the 20-day moving average. Some are starting to move to the 50-day moving average or above that. So that's generally a pretty good sign. So if you want to, buy more stock, the key again is making sure that you have the money, making sure you're not violating your margin, your margin rules. And if you want to sell some stock, of course, volatility is high, so you can take advantage of high volatility as well. Okay. I hope that answers that question, Magdalene.
So Omar, I think we got a quiet crowd here. Awesome. We're starting to get some questions. So I'll read this one out to you, Omar. Are you waiting to see more macroeconomic signs, for example, lower inflation, fingers crossed?
Yeah, we're waiting for that. July 13th is the first data point we have, which is the CPI data. Hopefully that comes a little bit lower, but also anecdotally, Magdalene, you can see with your eyes. Gas prices are starting to come down. People are not spending as much. Housing prices are definitely coming down. Stock prices are down. Crypto prices, all asset categories are down. And what that does is that lowers consumption. So yes, we're going to wait to see some data, but I think I can start seeing it with my eyes before that data is there. But we are waiting to see some data. Kaylin asks, do you stay mainly in the US market, any Canadian stocks, or is that not worth the time? No, it all depends on what stocks you like, Kaylin. It all depends. If you like the, TD Bank, great. This is a strategy you can do on TD Bank. If you like whatever stock, Enbridge. I used to trade Enbridge for years. You can do whatever stock. The idea is not necessarily the Canadian market or the US market. The idea is to invest in high quality companies that you believe will be around for a long time. So even if they go down in value temporarily, you're not upset. You're like, okay, I know it's down because of inflation or because of COVID or because of something else. I don't mind. I can wait for my stock to recover. That is the main idea. So as you can see what I do with Apple and Microsoft and Tesla, these are companies that we love long term. Again, you have to do your homework. We will share our homework with you. But if you like TD, you can do it with TD. If you like Enbridge, you can do that, or any other Canadian stock. So it doesn't really matter so much, Canadian or US. The idea, more importantly, is to learn the strategy, why it works, get some experience, and get going on a life-altering strategy. Okay, that is the idea. Okay. All right, I think that's the only question we have left, and that would be it. So if there's any more questions, guys, please address them now. Otherwise, for those of you who are able to join, we have a Rogers outage across the country. We had a lot of trouble actually getting all this done. Kalen asked, thanks. Just seems like U.S. stocks have much higher premium. Good question, Kalen. It's not, the premiums are not based upon the stock. The premiums are based on something called volatility. If you look over my shoulder, there's a book there, Option Volatility and Pricing. So the more a stock does this, okay, the more it does this, generally speaking, the more you get paid in premiums, okay? So you know how TD Bank doesn't do a whole lot, Royal Bank doesn't do a whole lot because they've been around for so long. They're much more established businesses. However, if you look at a company like Shopify, which is also a Canadian company, it'll have much, much higher volatility and will also have a high premium. So the factor that you're looking for is volatility, not whether it's a US or Canadian stock. That has nothing to do with it. So I hope that answers your question, okay? Volatility is what you want to look for, right? Okay. All right, Manib, thank you for everything. And guys, for those of you guys who want any more information, please let us know. Otherwise, we look forward to hearing from you guys and hopefully looking forward to teaching some of you guys. Otherwise, have yourselves a great weekend and take care.